Welcome back to Alpha Recap, your post-market wrap from stockalpha.ai. Markets closed the week with a pretty clear split between winners and losers, and we're here to break down what moved the tape. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. We've got tech, healthcare, and materials leading the charge, while cannabis, parts of crypto, and some energy names ran into trouble. Lots to unpack.
So what really stands out here is how thematic this was. AI and electrification pushing certain sectors higher, and regulation and security shocks dragging others down.
Yeah, that tracks. And remember, we're talking about what happened after the close. All of this is past tense. Markets closed up or down, headlines already printed.
Let's hit the outperformers first. Technology was a clear winner today. The headlines were heavy on AI. OpenAI expanded with a new London hub of more than 500 people. Microsoft rolled out new agent capabilities, and there were calls for more orbital GPUs and hardware. Those stories supported names tied to AI compute and enterprise deployments.
Right, and analysts noted that those moves push CapEx into chips, cloud providers, and enterprise software. When the big players expand like that, demand signals ripple through semiconductors and services spend.
And there was some cleanup on regulatory overhangs too. For example, a DOJ settlement for a big legacy tech company resolved a headline risk, which took pressure off software and infrastructure names.
That sort of clarity matters because it converts headline risk into a clearer revenue timeline for analysts. So software and hardware names that support AI got rewarded today.
Healthcare was another top performer. We saw clinical stories, an HIV remission case, and some late-stage oncology wins, and policy moves around digital care and connected devices.
These are the kinds of outcomes that change revenue expectations. When a biotech de-risk as a development path with strong data, it often gets a re-rating because the binary regulatory risk shrinks.
Exactly. So healthcare names with positive trial data or clear commercialization routes tended to finish the day up.
Materials rounded out the outperformers. There was deal activity and capacity commissioning. A private 5G deal that one briefing priced at about $6.4 billion. Neo Performance put an HREE, heavy rare earth element, processing line into service. And Glencore signaled a stake in secondary aluminum.
That combination pushed names tied to rare earths, processing, and recycling higher. Analysts are framing this as a shift from pure mining to more midstream processing and recycling, which can insulate margins from raw ore swings, but raises capital intensity.
Right, and that connects to electrification. More renewables and electric vehicles mean more demand for critical minerals and grid upgrades. So materials and certain utility CapEx stories benefited.
Let me pull a number here. France announced an electrification plan worth about 10 billion euros. And the EIA forecasted roughly 17% more solar this summer. Those kinds of public plans and supply forecasts give equipment and services providers better visibility, even if it's long lead time stuff.
Yeah, but let's be clear. Utilities didn't explode higher. The projects are big and slow, so the earnings impact is gradual. Analysts noted that long lead times and regulatory reviews temper near-term upside.
Okay, switching sides of the tape. The laggards. Cannabis was under pressure, crypto had mixed headlines, and energy was volatile for different reasons.
Cannabis was a tale of two moves. Some court rulings in places like Texas and Nebraska gave the hemp market a reprieve. But litigation in Illinois and Rhode Island, and weaker March sales in Michigan offset that. Net effect? Higher regulatory uncertainty heading into the 420 promotional period.
That uncertainty tends to produce de-risking flows. So the sector underperformed. Not a surprise, but still painful for holders.
Cryptocurrency was messy. Bitcoin bounced intraday to about $73,400, which shows resilience. But the headlines weren't pretty.
Two big negative items. A hyperbridge exploit that minted 1 billion bridged DOT tokens and layoffs at a major Layer 2 infrastructure firm. Those security and staffing disruptions reintroduced counterparty and protocol risk.
Right. So even though Bitcoin showed a bounce, the exploit reminded the market that custody and cross-chain bridges are still risk vectors. That can pressure tokens beyond just spot moves.
Energy was split. A geopolitical shock and a large trading desk loss increased near-term price risk for LNG and crude, while long-term announcements for renewables and battery projects provided offsetting support. The result was higher realized volatility and selective weakness in companies exposed to short-cycle commodity risk.
Analysts emphasize that corporate hedging and balance sheet strength will be differentiators in coming quarters. If you're exposed to short-cycle commodities, execution and risk management matter a lot right now.
Let's do a quick run through the neutral group: utilities, finance, consumer and retail, real estate, industrials, and communications. Mixed across the board.
Utilities got constructive headlines with that France plan and the EIA solar number. But again, the payoff is gradual. Finance was balanced. Long-term targets on legacy names, but cautious about lending margins and credit quality.
Consumer and retail had pockets of strength where AI integrations and logistics upgrades helped. Some distributors topped revenue forecasts in briefings, but consumer behavior shifts and promotions keep dispersion high.
Real estate saw healthy deal flow. Industrial and office financings, affordable housing deals. But leasing is uneven across property types, and tax worries kept the sector in check.
Industrial had some big headlines. Texas A&M announced about $226 million for a semiconductor center, and physical AI pilots and new transport management system capabilities are getting traction. The flip side was near-term margin pressure from packaging geopolitics and a FedEx rate increase of about 7%.
So companies with better logistics tech or pricing power could show more earnings resilience than peers. That's where differentiation matters in industrials.
Communications had heavy activity. Regulatory clearances in Europe, studio casting, and network partnerships. But reactions were very stock-specific. Telco tax debates and content spending cycles are creating uneven outcomes for carriers versus media companies.
Okay, quick reactions. Big tech hiring, helpful. Supply chain fragility, not helpful.
True. Short reactions. Bitcoin bounce, impressive. Crypto security, worrying.
Right. Now let's step back and talk themes, because this was a thematic tape more than a purely macro one.
Theme 1, AI is the connective tissue. OpenAI's London hub, Microsoft's agent work, and Amazon's product pushes all point to more enterprise AI spend. That ripples into data centers, semiconductors, cloud services, and industrial automation.
In plain terms, AI needs compute. Lots of it. Materials for semiconductors, specialized equipment, and cloud capacity benefit. Analysts note CapEx shifts into chipsets and systems, while some downstream labor intensity gets compressed.
Theme 2, electrification raises materials and utilities risk-reward. The combination of public electrification plans, more solar and rare earth processing commissioning, all points to higher demand for critical minerals and secondary metals.
Which means investors and companies are reallocating capital into processing, recycling, and grid hardware, not just raw mining. That's a material change in the supply chain.
Theme 3, regulation and litigation are systemic risk multipliers. Cannabis and crypto headlines showed how quickly legal shocks can compress valuations, and comms and media have their own regulatory risks around spectrum and taxes.
So until we see clear licensing regimes or custody norms in crypto, volatility is likely to cluster around legal calendars.
Theme 4, geopolitics and supply chains keep creating volatility for commodities and energy. The short-term flows are unpredictable, even as renewables and battery projects support longer-term fundamentals.
Okay, biggest moves and why they mattered. First, Bitcoin's bounce to about $73,400 tested market resilience after earlier profit-taking. But the hyperbridge exploit and layoffs tempered optimism.
Second, those tech hiring and hardware signals, OpenAI's more than 500-person hub and Microsoft's agent work, suggest sustained enterprise AI spending that could lift chipmakers and cloud providers over the next several quarters.
Third, materials M&A and commissioning. That about $6.4 billion private 5G deal, Neo-Performance's HREE line, and Glencore's shift into secondary aluminum point to structural repositioning in the industry.
Fourth, utilities electrification headlines. France's €10 billion plan and the EIA solar forecast are moving policy and supply forecasts in the same direction, which reduces some uncertainty for long-cycle projects.
Fifth, industrial capex and skills. that Texas A&M Semiconductor Center, plus the FedEx rate increase of about 7% are reshaping industrial cost bases and could accelerate automation investments.
Sixth, cannabis legal mixed outcomes. Local court wins in a couple of states and losses or pullbacks in others kept the sector volatile entering the 420 promotional period.
All solid points. Want to drop a few quick informational takeaways people can use to track this moving forward?
Sure. Analysts suggest reassessing exposure to policy-sensitive sectors. Cannabis, crypto, and parts of communications are reacting to legal calendars, so monitor court dates and state regulatory timetables.
Monitor AI CapEx spillovers. Hardware suppliers, cloud infrastructure providers, and industrial automation vendors are getting incremental demand signals. Keep an eye on semiconductor equipment and specialty materials for early cyclicality signals.
Watch electrification supply chains, commissioning reports, London Metal Exchange inventory data, and company disclosures on processing capacity will help clarify supply timelines for critical minerals and recycled metals.
Prioritize liquidity and hedging in high volatility areas. Crypto and energy traders were reminded that security exploits and trading losses can spike realized volatility, so risk management matters.
Focus on company-level differentiation in industrials and real estate. Pricing moves, like that FedEx rate increase, flow through logistics costs, so companies with automation or pricing power may show more resilience.
And track near-term catalysts. For cannabis, the 420 promotional period and pending court rulings. For tech and materials, big cloud contract announcements and facility commissioning updates can shift relative performance quickly.
A short reaction segment. Analysts bullish on AI and healthcare. Caution on policy-exposed assets.
Another one. Structural repositioning in materials, moving beyond pure cyclical calls.
Let's flag the key risk vectors for next week. 1. Regulatory rulings, hemp and cannabis court decisions, comms and telco tax debates, and crypto enforcement cases.
2. Macro data and central bank comments that could reprice risk assets and bond yields, affecting growth multiples across tech and real estate.
3. Commodity flow disruptions and LME inventory changes that could widen spreads for aluminum and rare earth elements.
4. Security events in crypto infrastructure. Exploits and cross-chain bridge integrity remain immediate risk drivers for token liquidity and sentiment.
How analysts are framing the tape. There's a bullish thesis for AI and healthcare, steady revenue acceleration in software and cloud tied to AI, and de-risked pathways for certain biotechs.
At the same time, research desks are cautious on policy-exposed assets. Until licensing and custodial norms improve, cannabis and crypto might stay headline volatile.
And analysts see structural repositioning in materials, with more focus on processing, recycling, and footholds in electrification supply chains rather than just commodity cycle bets.
So, quick wrap-up takeaways before we sign off.
First takeaway, capital was reallocated toward durable, tech-led productivity themes, AI, automation, semiconductors, and toward the capital-intensive build-out for electrification.
Second takeaway, regulatory and security shocks kept the tone mixed. Cannabis and crypto showed how quickly legal or security events can compress valuations, even with a stable macro backdrop.
Third takeaway, watch near-term catalysts, court rulings, enterprise AI announcements, commissioning and inventory data for critical minerals, and macro prints that could recenter rate-sensitive growth valuations.
And a final reminder, this analysis is for informational purposes only. Analysts note risks and present data to help inform decision-making. It's not a recommendation to buy, sell, or hold any security, and it's not personalized investment advice.
If you want to dig deeper on any of the sectors we covered, head to stockalpha.ai. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
All right, that's our recap. Thanks for listening, and we'll be back after the next close with more sector snapshots and rolling coverage as new catalysts unfold.
Thanks, everyone. Stay curious, stay analytical, and we'll see you next time on Alpha Recap.